You know, the stock market is soaring, the S&P is looking strong, so why does it feel like nobody's celebrating? What if I told you that beneath this shiny surface, we're actually witnessing the most hated market rally in decades? It is a massive contradiction, and today we're going to dig into the data to find out what's really going on.
So that's the core question, right? If stocks are up, why all the negativity? Is this just some kind of dramatic headline? Or is there a deeper story here that most people are completely missing? On the surface, everything looks bullish. The experts you see on TV, the big market voices, they're all saying the bears have totally disappeared. So when you hear a quote like this, the idea of a hated rally sounds completely nuts, doesn't it?
This is exactly why we have to look past the talk and get into the hard numbers. We need to peel back the layers and see what the data is actually telling us. Because, spoiler alert, it paints a picture of some seriously deep negativity that's completely at odds with this rising market. So where are we getting this info? It all comes from something called the AAII Investor Sentiment Survey. And you should know, this isn't just some random online poll. Oh no, this is the real deal. It's widely seen as one of the best ways to measure how individual investors are actually feeling about where the market's headed over the next 6 months.
All right, so we've set the stage. Now let's get into it and uncover the pessimism. We're about to look at the specific data that reveals why this rally is so disliked. And believe it or not, it all comes down to one little number.
Okay, so what does that survey actually say? Well, here it is. The average bullish reading for this year has been 11.7%. Just let that sink in for a second. Historically, that's not just gloomy. That is a deeply pessimistic reading. This one number is the entire foundation for this hated rally argument.
And to really get how wild that number is, you've got to put it in context. In the entire 35-year history of this survey, a yearly average has only been this negative 3 other times. Look at the years on this slide: 1990, 2002, and 2022. What do they all have in common?
Yep, they were all absolutely brutal bear market years.
And this right here just brilliantly illustrates the huge disconnect we're talking about. What people are feeling, what the data shows, it lines up perfectly with a nasty bear market. But what the market is actually doing is staging a powerful V-shaped rally. And that's the whole paradox. That's what makes this thing so unique and, you guessed it, so hated.
So you might be thinking, okay, who cares if everyone's grumpy while their portfolios are going up? Well, here's the twist. What if all this negativity isn't a warning sign? What if it's actually the fuel for the next leg up? I know it sounds totally backward, but let's break down how this pessimism could actually be a powerful contrarian signal.
Catalyst number 1, just take a look at this. A whopping 80% of professional fund managers are losing to the market this year. They are trailing their benchmarks. Just think about that. The vast majority of the pros got it wrong. They were way too cautious, braced for a crash that never came, and now they're paying the price for it.
And listen, we're not just talking about a slightly off year for these managers. No way. This is the worst they've underperformed in almost a quarter of a century. This creates an absolutely incredible amount of pressure. Their jobs are literally on the line.
So what happens when thousands of professional managers are under this immense pressure to perform by year-end? Well, it creates a powerful dynamic, something called a performance chase, that could be the key to the market's next big move.
It creates what's called a performance chase. Essentially, these managers are almost forced to buy stocks into the end of the year, even if they don't want to, just to try and catch up. And what happens when a lot of big money is forced to buy all at once? It could push the entire market even higher. And this performance chase isn't happening in a vacuum. There are other real tailwinds pushing the market forward. You've got strong seasonality on your side, since November is historically a great month for stocks. You have the AI boom, which is legitimately boosting corporate profits. And on top of all that, inflation is cooling off, which gives the Fed more room to breathe.
So is it a straight shot to the moon from here? Not so fast. There's always a wild card, and in this market, it's the Federal Reserve. Before we get to the fireworks, we need to talk about the choppy waters that might be just ahead.
You've really got 2 camps when it comes to the Fed right now. In one corner, you have the Fed itself being super cautious, saying a rate cut is far from guaranteed. But in the other corner, you have the hard data, which shows inflation is, and this is a quote, falling like a rock. The argument is that the slowing economy is going to force the Fed to act, no matter what they're saying today.
So with this back and forth, what happens in the short term? Well, the consensus is that things could get a little messy. We're likely entering what's called a period of chop. After a huge run-up like we've had, the market simply needs to take a breather, consolidate a bit. So we should probably expect some sideways, volatile action for a little while.
But what happens after that chop? Where could this market actually be headed? Well, some analysis points to a truly stunning target. The S&P 500 at 7,000. Now I know that is a huge number, but it's a call based on the powerful cocktail we've just discussed. All that negative sentiment acting like rocket fuel, the professionals being forced to chase the market higher, and the fundamental tailwinds pushing it all forward.
So it all comes down to this one big final question. You have this rally that almost nobody believed in. You have 80% of the pros on the wrong side of the trade. As we barrel towards the end of the year, does the pressure just become too much for them? Are they going to be forced to give up, jump in, and chase this hated rally? That could be the spark that sets off the real fireworks, and that right there is the key thing to watch.